Chintan Haria is fund manager with ICICI Prudential AMC. He is joining us right now on the show. Mr. Haria, thanks very much for your time. Good morning. Prashant this side. So the market has seen a substantial up move recently in a short time period, very concentrated move. What now really from here? Is it again going to be a big yo-yo in your assessment? Or, I mean, this one will last and we can sort of meaningfully move higher from here as well?
So if we look at on a 3-year view, we have a very positive view on our Indian markets. If you look at the bottom up, the numbers that have come for the March quarter, they have been almost a 6% beat on the income, which after 12 to 13 quarters of disappointment on the earnings, we finally seen the earnings give us a positive surprise. If you look at the GDP numbers have also given us a positive surprise. And as I look at into the skyline outside, the rain gods also seem to be smiling on us. So from a bottom-up as well as a top-down macro point of view, India today is looking definitely good. One of those rare countries in the globe where there is growth and clear growth driven by domestic economy. We are not too much linked with the external economy as such. And as far as the flows are concerned, if we look at it, the sharp fall which we saw in the markets in Jan-Feb and which you have seen has got reversed in March, has been mainly on account of a correlation with oil and the flows. So if you look at the fall that we saw, it coincided with oil coming off from almost $80 to $30. And the moment oil has reversed from $30 to $50, you've seen March we had a significant inflow of FI money, almost close to $10 billion. So $3 billion out of the $3 billion out of the $30 billion actually came into India. So which was one of the, I think in 24 months, the largest amount of FI inflow that we've seen. So clearly that momentum can continue. Today, if we look at the globe, India is the only country where FIs seem to be positive. And if you look at domestic money as well, that continues, and we have a belief that as the domestic savings continues to grow along with GDP, the absolute number, we will continue to see good inflows into domestic institutions as well. So both on a flow basis, on a fundamental basis, on a macro basis and a micro basis, India seems to be on a strong footing. Having said that, we've seen a close to 15% rise from the bottom. Is it sustainable? Will it go higher? Will there be volatility? Those are questions which probably don't have clear answers. But what we know is that things are looking much better than what they were looking about a year and a half back, both on micro and macro front. And hence, from an investment point of view, into large cap funds and large cap oriented diversified funds, this seems to be a good time.
What has been the fourth quarter, I mean, your analysis of earnings? You said 6% beat on income. I'm assuming you're talking about profits. But what has the actual growth been?
Yeah, so basically really? Whatever the
top line, operating level, net level?
So the top line operating net level, the people were almost expecting a flat to marginal positive growth. I think we've seen a 6% to 7% growth, which itself has been a significant positive surprise. And if you remember, the Jan-Feb March metals has actually seen a rally. And that will get translated probably in the June quarter results. So the metal rally which we saw and the crude rally which we've seen will start getting reflected in the June quarter's results. So our expectation is that the June quarter result may be better than the March quarter result. And over the next 2 years, there is a significant strong possibility that we will see a 12 to 14% earnings growth. Basically, we are coming off a very, very tough kind of environment on the economic side. If you look at GDP growth, that was at decades low on the real GDP front. That seems to be moving. And also the commodity prices and crude prices, they seem to have bottomed out in the first quarter of calendar year 2016. So clearly, that will give a good support. And inflation, if you look at it, in a deflationary environment, it is difficult for equity stocks to actually give a top line and bottom line growth. And now we are moving into a situation after 2 years of deflation or 1.5 years of deflation. Clearly, there seems to be inflationary pressures which are coming into the system. And this inflationary pressure is not actually very high inflation, but a moderate inflation, which is always good from an emerging market economy point of view. Any country which has seen growth with a moderate inflation is considered to be one of the best sustainable growth stories. And hence we expect that going forward over the next 2 years, there is a likelihood of a earnings momentum which was missing over the last 2 years to come back.
You said you expect fiscal 17 earnings to grow by between 12 and 14%. Can grow.
That's right. That's right.
Right.
Essentially, that is on account of, if you look at the last 2 years, what has bogged down the earnings. It's basically the banking system which was seeing a write-offs. It's basically the metal and oil and gas space which was actually seeing a significant amount of lower growth or actually degrowth because of the falling commodity prices. And also, if you look at the entire system capacity utilization, which is at 60-65%, with the demand push coming from the government capex, that capacity utilization improvement will lead to operating leverage and financial leverage courtesy the falling interest rates. And that should actually augur well for the earnings growth over the next 2 years.
Sure. The GDP numbers, Mr. Haria, I mean, you're 7.9 real growth. I mean, are you completely assured about that? Because, I mean, there are still various questions. I mean, actually, the only area where private growth came from was private consumption growth. Really grew, right? In absolute numbers, it grew by about 1,30,000 crores in 1 year.
That's right.
It's tremendous. I mean, everything else, be it exports, be it investments, I mean, they subtracted from growth. They didn't add to it.
Yeah, because...
Yeah, go on.
So India being a domestic story, that does not surprise us that consumption has been driving the growth for the last many years, and that will continue to grow be the story for the next few years. I think we are going to surpass US as the second largest middle class in 2020, and that will obviously lead to a growth in consumption. So there is a likelihood that that consumption growth ultimately helps the entire economy in every sector that we look at. So while today the investment expenditure, the capex in investment is something which we are not being able to see get converted into numbers. My interactions with companies over the last few days at few conferences has given us, or at least has given me the confidence that things are definitely turning, at least as far as irrigation is concerned, the expenditure on irrigation, the expenditure on construction, the road sector anyways has seen a significant amount of, thrust. And if you look at railways, I think after 1.5 years of design or thinking, that also seems to be a significant push on increasing the capex as far as the various projects of the railways is concerned. So if you look at the government expenditure, the planning stage is over, the execution stage has just started about 6 to 8 months time, and that is getting reflected. If you look at all the road sector companies, their order books are at multi-year highs, and the growth is significantly higher in terms of the order books than compared to what we had seen over the past. That may get translated or reflected across sectors as the government starts giving thrust to one sector after another. Like I said, irrigation is already seeing that. Roads saw that about 6 months back, and railways may see that over the next 6 months or so. And one after another, we'll see that gets translated into order books of companies, and then eventually the growth in profitability and top line.
No, but you began by saying that consumer demand is what is going to lead the market for the next couple of years, right? But so sure, I mean, investment in infrastructure, roads, irrigation, railways, eventually that will have the multiplier effect. But that's a slightly longer term kind of story. But from your meetings, interactions with companies, is consumption at this point picking up, and in what segments?
Yeah, so basically the interaction which I had gave me the feeling that obviously at the premium end the consumption is pretty strong. At the mass market end the consumption has weakened over the last 12 months, probably because of 2 bad monsoons. And like I mentioned, with a third monsoon which is supposed to be better, and we are already seeing that, the mass consumption may also come back. So consumption may again get a fillip which was missing at the mass end. So with probably the government well-directed government direct benefit transfers and the picking up of the economy, and in general a better economic environment, there will be consumption growth in the lower strata, which was probably missing over the last 12 months because of weaker monsoon, weaker MSPs, weaker rural wage growths, etc. All of them combined into actually a weaker environment for consumption at the lower to middle end, while the upper end consumption actually continues to be strong and will probably continue to remain strong. Like I said, the middle class is only going to grow, and our GDP per capita, which is about 1550 to 1600, the historical evidence is that whenever any country has grown or gone above that 1550, 1600, there has been a J-curve as far as the propensity to consume various, be it auto or be it consumables, or upgrading from FMC within the FMCG space as well. So you will find that consumption will definitely be one of the strongest drivers of Indian economy, purely because our domestic economy and the growth of population will ensure, the demographics will ensure that consumption is a multi-year story as such.
No, absolutely. I mean, over a period of time, I hope definitely is true. But I've been looking into the jobs data, etc., a little bit recently, and it's not a very healthy picture. I mean, so the Labor Department does a quarterly survey of jobs created, right? I mean, they survey about 3,000 industries, 3,000 companies rather. So while it's not a large survey like the NSS survey done every 5 years, it still is indicative. Their data shows that for 2015, the jobs created were the lowest since they started collecting data. And they started collecting this data right after the financial crisis. CMI puts out unemployment, data, and their sample size is pretty large, 150,000 individuals. And it's published, actually it's published every day, but, they put other monthly numbers as well. And they started doing this in Jan 2016. There's been a huge increase in the total unemployment rate from beginning of 2016 till the last published data is for the month of May. I spoke with them on Friday as well. Some of these things are really, and there are other data points as well. It is kind of disconcerting. The demographic dividend based on more people entering the workforce, becoming productive members, consumer consumption increasing. It sounds good and maybe should happen, but it's not showing up in a lot of the actual numbers that we are seeing on the ground. Would you agree? And what implication does this have?
So, anecdotally, of course, with 1 million people joining the workforce every month, and that will continue for the next few years, it is a challenge which I think, if we look at this government's focus, it's definitely there. And are we seeing a lot of, good data or actually a data on employment? India, I think, has almost 90% of its workforce in unorganized sector. So to that extent, I'm sure to get a correct data or correct picture in an environment today is difficult, because any other country, even if I look at Brazil, I think only 60% is unorganized. In India, I think with 90% unorganized, to draw a conclusion based on surveys of only 1 lakh people out of maybe a 30 crore or 40 crore workforce may not be giving us the right picture. But yes, definitely we need to improve, and it is possible in mass employment generating sectors like textiles, gems and jewelry, etc., where the thrust of the government is obviously there. Yes, if demographic dividend we need to get off, we need basically good employment, and that good employment will happen only in an economic growth environment, which, like I mentioned earlier, we are seeing green shoots, and as the economy picks up, the job creation will also pick up with a lag. So what data you are seeing is 2015, which is coming after 2 to 3 years of bad economic environment. When the economic environment, which has just turned now, you will find that suddenly the GDP growth, the credit growth, the banking system doing better, the job creation much better. So all of it will unfold based on the growth in real GDP. Currently, obviously, whatever data we're seeing is basically kind of getting guarded or getting clouded by the fact that 3 to 4 years we had virtually a very, very weak economic growth and a weak economic environment.
Fair enough. I mean, that's one way to look at it, and I hope that's the correct way to look at it, because this is a huge challenge really, and it's got implication for the market as well. I mean, purchasing power, consumption levels, etc. Everything. I mean, really. Okay. Let's just get back to talking about specifics, Mr. Haria. I was looking at the funds that you manage. In the equity income fund that you manage, I see a lot of pharma. You know, you've got Cipla, you've got Sun, you've got Aurobindo, and I'm just looking at your top holdings. What, are you sanguine about prospects for pharma from here? You think the challenges with regards to FD, etc., companies have basically stepped up to tougher standards, compliance standards, etc., and that period of adjustment is behind. Is that your view?
So basically, if you look at it, currently the sectors broadly, the ones which we like right now, and then I'll speak about pharma, is basically oil and gas, because courtesy oil going up, the upstream oil hasn't done much. If you look at power utilities, there we have comfort that with the growth in Indian power consumption and generation, these companies have being a regulated ROE business, they will continue to give us that reasonable return which we are expecting. And pharma, if you look at it, we were negative on pharma about a year and a half back. But with the current correction in valuations, and obviously that is because of a lot of pharma companies getting 483s and some of them getting import alerts. Our belief is that FDA set up basically their India offices few years back, and this is a kind of temporary phenomena wherein the companies are under scrutiny, they are under watch in terms of what they are doing. And our belief is that in terms of the supply to global pharma majors or global pharma, among global pharma companies, Indian pharma companies have actually established their strong foothold, and they will continue to grow and lead the pack as far as generics is concerned. And most of the companies which you mentioned, they are actually very strong in terms of their balance sheet, and we believe that there is a chance that once this temporary phenomena goes behind us, we will see back to normal kind of growth in these companies, and this, in some sense, this is an opportunity in a very good sector where we have seen temporary problem to build the positions and actually gain as the sector grows over multiple years. That's our call on pharma, that it is a multiple year growth story. The valuations had become lofty about a year and a half back. Post the correction about in the last 6 months to 1 year because of external and some of the company specific issues, they have become a good contrarian buy as such right now.
Sure. You know, I'm looking at the top holdings. Maybe the recent holdings the live current holdings would look different, but the declared holdings don't have oil and gas stocks, either in the equity income fund or the value fund, value series 3 fund. You said you like upstream oil stocks, right?
So in general, So in general, if you look at it, that there is a, I mean, in terms of valuations, if you look at the upstream oil stocks, they look very cheap. So maybe we'll wait for a right time. But yes, if I look at the sectors where we see value right now, it's oil and gas upstream, which is definite value. It has and power utilities and healthcare as a contrarian bet. So those three sectors definitely look good to us. And on the other hand, if you look at the structural, or rather the 3-year stories which look very good, are obviously the construction space, specifically the road space. And there, if we can find good stocks, it will be good. So basically, if you look at the overall fund, and the fund which you spoke of, the equity income fund, that's meant to actually be a conservative fund for conservative investors, wherein if an investor wants to enter in the equity markets and get a flavor of the equity markets in a conservative manner. So we keep the portfolio balanced between, stocks with reasonable returns, stocks where we expect, significant re-rating, as well as stocks which are kind of contrarian right now in terms of temporary problems, and they can come out of their temporary problems. So it's a portfolio approach wherein today, obviously, pharma is fitting in better. So, and eventually someday you will find that upstream oil also will find a place.
Can you talk about Aurobindo specifically, Mr. Haria? Because it's, now for many months, it's one of the only companies which has continued to get approvals while others have been struggling. I mean, yet it's never kind of fully garnered the kind of attention for one reason or the other that some of the other large pharma companies have. It's not a small company anymore.
So in general, if you look at the sector, and I can only speak about the sector, we believe that India, the capability which we Indians have created in the pharma space is next to none in terms of it's the best in class, it's the world class, and we will continue to see our footprint getting bigger and better. And that's why, if you look at it in a positive way, that if a country or if FDA is setting up shop in India, they definitely believe that India is a very big market and they need to have a shop in India. It's not like FDA has a shop in every, or FDA has a office in every country. So they believe that Indians are there for the long haul and they have set up shop here, and we believe that closer scrutiny or better scrutiny is good for us in the long run. And pharma is a multi-year growth story as we believe in, because both domestic as well as global, if we look at it, we have a strong foothold and we will continue to make inroads and we'll continue to get approvals courtesy our strong pharmacy backgrounds. And as far as manpower is concerned, we have always been one of the best as far as manpower in engineering and pharmaceuticals is concerned.
We'll leave it there, Mr. Haria. Thank you very much for your time. It's a pleasure. Good getting that perspective today from you. Thank you.